What is up, everyone? Welcome back. In this video, we are going to do a quick chart breakdown on ticker DIS, the Walt Disney Company. Very strong stock. It is more of a technical breakdown. If you could spot significant zones in the chart, some of these charts are market proof. And if you're patient enough, you can enjoy the swing trades up and down. All right, guys, let's get to it. Okay, Disney. $176 billion market cap, guys, trading at just under $100. We're seeing a nice little rally in the market this week. Let's see if we can continue it up. Be very patient, guys. And since Disney was trading at its peak, we have already lost 50%, but you could see we are still in a super strong uptrend, guys, since we were trading at $15. If you're still holding that position, you're still up 553%, which is remarkable. You can see this chart, guys. It kind of looks scrambled if you look at it with a beginner's eye, but if you're able to spot significant zones, you'll be able to take advantage of the swing trades and the chart will be much clearer to you. And I'll be honest with you guys, I am not totally in love with this trend channel. We are in the weekly chart, and I can rephrase that and say it is not as significant in this trading in this chart as like there's other big tech stocks like Microsoft, Apple. Those trend channels are more significant. This one, it kind of keeps the boundaries, but if you could see, I'll bring up the RSI. I do think it has respectable significance. You could see on this midline, especially every time we're oversold on the midline in the weekly chart, we have some sort of reaction. And over here as well, oversold, you get the point, guys. But my point is I would not rely on this trend channel for the trading, and it'll be much clearer when I bring up those zones. And real quick, you know the deal. If you like my content, guys, feel free to subscribe on YouTube, but my premium content is on patreon.com/GainsKeeper Trading. We have a premium vault of tutorials for beginners to advanced traders, trading systems, small to large cap swing trades and breakout stocks, and we go beyond the charts to focus on personal growth and personal awareness and also apply that to the charts because it goes hand in hand, guys, to improve the quality of your own life and in the trading world, which is both great. All right, guys, patreon.com/GainsKeeper Trading. So as I stated in the beginning, guys, I'm going to throw these drawings on. The main purpose of this video is for spotting swing trades, guys. And if you find these stocks, they're kind of golden opportunity stocks because they don't rely on market sentiment too much, only in the short term, not like so much for extremes like other stocks. And you could see that Disney respects these zones a lot. We have this bull demand zone here at 79.51 to 86.65, and the bear supply zone right on top. And this is just like the ping pong, like I said in the title, guys. The bear supply zone 116.98, 124.72. And you could see every time we dip into this zone, the bulls take over, and then they say, all right, now the bears can have theirs. It's like a mutual agreement between the two, guys. Dip into the zone. You could see, especially in the recent, and the monthly chart shows it really well. It's just condensed a little, guys. Even during the COVID pandemic, we did not make it past this zone. You could see dip up, and each time you could take advantage of this 50%, 35%, 54%. Remember, guys, none of this is financial advice, of course, but you get what I'm saying. If you identify these zones and you're patient enough, remember, guys, patience prints. And if you're patient enough, you could just swing it back and forth. And you could also go short if you have a margin account. If you, I know going short isn't for everybody, but if you do, you could take advantage of the dips as well. And let me bring the RSI back up. When you spot these zones, trading does not have to be that difficult, guys. I know I like to go in depth on my analysis, but it's pretty simple a lot of times. When the weekly RSI is oversold in the bull demand zone, and then when it's overbought in the bear supply zone. This is basic. This is as basic as it gets for swing trading, guys. And you can see right now we got oversold on this RSI on the trend channel, and we're in an upper reaction now because of the bull rally in the market right now. And you could see this big spike here. Like, how do we know that this price was going to go like this? Well, we know we had the COVID dip, right? And initially, if you bought here, if you knew the zones prior, you could see from prior moves that this is a high demand zone if you know how to draw your zones and locate supply and demand zones. We initially got rejected here. And if you sold here and that was your strategy, there's nothing wrong with that, guys. You still cut out 50%, but 60%, even better. And that's great for $180 billion market cap. Excuse me, guys. But, how do you predict this move? And, when in doubt, you always go to another tool, your Fibonacci tool. So retracement here, and you could see that the 786 level is the last point of support or rejection in this point rejection, and it was right out of our decision breaker line. We got rejected initially, and then the market maker said nope, we had this massive bull run after that, and our furthest extension level, another very strong extension level, the 1618, was hit pretty much right on the dot, guys. So always put that into context. These aren't always guaranteed levels, but if you have them on your chart and you see this spike in the move and you're still in the position, you have an idea where you might want to take profits and stuff like that, and even higher extension levels. But the 1618 is the one I typically use for the furthest extension level, and I added a 1272, guys, here. This is an also significant level that I just recently added. So while we're at it, we could say, where does Disney go from here? And I'll be honest with you guys, not financial advice. This is not a zone I'm particularly interested in. It's kind of in the middle between these. We had our rebound. I'm mostly interested in this bear supply zone and this bull demand zone. So when they get there, I'll do an update. And we're trading under all the weekly EMA lines. We're in the weekly chart still, but you could see in the past, Disney had no problem breaking these lines. Breaking them, just to get, the Bulls had enough volume just to get to the bear zone. The bear said, "Okay, pass the ball. It's my turn," and then we drop the price. We see the gap up here, and if we do have a market crash or a bigger correction, and we go past this bull demand zone, which we haven't since 2014, guys. So 12 years now. So keep that in mind. This is a very strong support line here, very strong demand zone. Our next support zone would be between 62.10 and 69.97. And if we see a rally, if we have prices to the upside, we have a very important price here, the decision breaker, I like to call it. I spelled it wrong because I'm a Momo, but it's okay. Fix it right there, 133.27. And I'll show you without the indicators real quick, guys. You could see we squeezed through it here, top of the trend channel, found support. The EMA line supported it one more time, and then the market makers during COVID, they said, no, we're gapping it down. You could see we exactly gapped it down right on this line all the way down, came back up, and the market maker said, now we're going to gap it up. So very, very critical decision breaker here, two prices to the upside. And if we want to see even prices higher, 168.69 is the higher price break, guys. Keep that in mind. I will do an update at that time. We are in the middle of, we're on the trend channel, but like I said, the trend channel is not as significant to me in this stock as it would be in other stocks. I like the bull and the bear supply zones, and there's stocks all over the place like this, guys. Just got to find them, locate them. You're not going to find them on purpose. You're just going to do your zones, and you're going to say, oh, wow, this is pretty obvious to me. I could buy here, I could sell here, and I can make profits going either way. And the market doesn't really have to fluctuate that much. So as long as you're patient, and this is the weekly chart still, you might have to wait, 140 days, 3-4 months, but for 50-60%, and typically these large cap stocks, you're investing larger capital, not financial advice, but that's how it is. And you can also see this RSI could be getting compressed here. So maybe we see a rejection at these EMA lines or the bull demand zone and come back down. And, that's part of the swing trading too, guys. So once you put it all together, use your Fibonacci. The market sentiment is always critical in these stocks, guys. But ultimately, the point of this video was to understand that if you could take action and identify these zones, that you could be very successful in trading them. And it's not, it has to be a long period of time. And especially with these big cap stocks that are less risky, let's call it. All right, guys, enjoy the rest of the weekend and stay sharp, guys, as always.